Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside, where preferably your wave 4 is not yet finished as you look for a bigger range, after which you then expect continuation to the upside in a wave 5. Common target area for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low to the high of this wave 3, giving you a target between 62.2k and 49.3k. The invalidation for this scenario is the 0.618 at 43.5k. The reason why preferably this wave 4 is not yet finished is because of time. You can see that this low here has been made before the 0.382 Fib time, which would be very rare for a wave 4, as most commonly a wave 4 is longer than wave 2, and the Fib times you see on the chart are taken from the start to the end of 2 to the end of wave 3. Therefore, we are comparing wave 2 with wave 4 in time, and most commonly wave 4 would then end after the 1-to-1, which is the 12th of August. However, the rule of alternation in Elliott waves does say that if wave 2 is long in time compared to wave 1, and it is quite a lengthy structure, wave 4 can be shorter than wave 2, but you at least want to see it end after the 382 sitting on the 6th of May. So in this scenario, preferably your range is not yet finished, meaning that on the daily time frame we are then looking for bearish structures to the downside, and what we're looking for here is a wave A, B, and then a wave C to the downside, ending below the low of wave A, meaning below 56.6k. Here we have a leading diagonal in a wave A, 1, 2, 3, 4, a 5-wave structure, 3-wave corrective move to the upside in a wave B. Common target area is the 886 for wave B at 71.8k. Then we're looking for a wave C to the downside, which has to be an impulsive structure where you're going to be looking for a bigger 5-wave move to the downside. Now that means that locally we want to count impulsive structures to the downside, where we then have a finished wave 1, a potentially finished wave 2, and look for continuation to the downside. So inside the first structure to the downside here, the only way to count this impulsive would be a wave 1, 2, 3, then a WXY inside this wave 4 here, which is a sideways double combo with a flat in W, then a wave X and a zigzag to the upside in a wave Y, not touching the 0.618, which is an invalidation for this wave 4, taken from the end of wave 2 to the end of wave 3, and then you have your wave 5 to the downside, counting as a wave 1, 2, 3, very short wave 4 here, and then a wave 5 towards the downside to finish your blue wave 1. Inside wave 2, we can count this structure to the upside as a 3-wave structure in an ABC inside wave W, that's a zigzag, then a wave X to the downside, also an ABC zigzag, and then another zigzag to the upside for a wave Y, creating a WXY double zigzag. On the lower time frame, we are then looking for impulsive structures to the downside as we want to see a wave C, meaning we then have to count this move to the downside as an impulse in a wave 1, 2, 3, 4, and an extended 5th wave, which is rare in an impulsive structure, as most commonly your wave 3 is the longest, strongest, and most impulsive wave. In this scenario, we then have a wave 1, a wave 2, wave 3 finishing at this low over here, and then inside wave 4, a WXY with a flat in W, then a wave X and a zigzag in a wave Y, not touching the 0.618 Fibonacci, taken from the end of 2 to the end of wave 3, which would act as an invalidation for 4, but it's not touched, and then you have an impulse to the downside in wave 5 as a wave 1, 2, 3, very short wave 4 here, which is also uncommon, and then a wave 5 to the downside. The common target area for your wave 2 is between the 786 and the 618, taken from the start to the end of your blue wave 1, which, as you can see here, has been respected. And inside this wave 2, we can count a double zigzag in a WXY, with inside wave W, a wave A, B, and then a 5-wave structure to the upside in a wave C, 3-wave corrective structure in X, and another A, B, C inside this wave Y. The invalidation for this scenario is price moving to the upside, taking out the high at 70.6k, and what we're then looking for is a bigger wave 3 to the downside, as in blue we have the higher degree count 1, 2 and then 3, 4, 5, and inside wave 3 we could be looking here for a wave 1, then a bounce in a wave 2, before then a wave 3 in white of the bigger wave 3 in blue, which should be the biggest and most impulsive structure towards the downside. Probabilities increase for this scenario the moment you take out the low here at 66.2k. On the 15-minute time frame, if we're looking for bearish continuation, we want to count impulsive structures and then a wave 1, 2, 3, 4, 5, where possibly your wave 3 here is finished after touching support, the 1 hour order block. Then we want to see a range in 4 and another drop to the downside in a wave 5. The common target area for your wave 4 is the 0.236 to the 0.5 Fibonacci, taken from the high of 2 to the current low that we have over here, giving you a target between 68k and 68.6k, with the invalidation being the 0.618 at 68.9k. After a wave 4, we then want to see one more move to the downside to take the low to finish wave 5. The more bullish scenario on the weekly time frame is that you are still looking for the higher degree wave 4 in yellow, as we have not yet finished the yellow wave 3 here, with the internal green count being a wave 1, 2, 3, 4, 5, where then preferably your 4 is finished and you're looking for a wave 5 to the upside. Here, your common target area is between the 0.382 and the 0.5 Fibonacci for this wave 4, taken from the low to the high of the green wave 3, with the invalidation being the 618 at 49.3k. If we look at this being the low and continuation towards the upside, then on the lower time frames we want to count impulsive structures. The first scenario is an impulse in a 1, 2, 3, 4, looking for a 5 towards the upside, where preferably the low of your wave 4 is in, as you don't have a lot of space anymore before you hit the invalidation for this scenario, which would then mean that the only bullish scenario that you have left is pretty much the double 1, 2 here. So if price does move to the downside, hit the invalidation of the previous scenario, the alternative is going to be a double 1, 2, where the common target for 2 is the 0.5 to the 786, 66k to 62.6k. However, the probabilities for a double 1, 2 aren't that great, because your second wave 1 here is so long in time and price compared to your higher degree wave 1 in green, as in green you count a wave 1, 2, 3, 4, 5, and inside the wave 3 here in green you have the blue count 1, 2, 3, 4, 5 of a lower degree. So preferably your blue wave 1 is actually shorter in time and price compared to your green wave 1, but that's not the case. It's not an invalidation, it's just probabilities, right? And it just lowers the probabilities. Same is true for wave 2 as well. If wave 2 is longer in price as well as in time, it just reduces the probabilities. So currently a double 1, 2 doesn't have great probabilities as long as the impulse isn't invalidated. It has the highest probabilities because the double 1, 2 isn't that great. On the 1 hour time frame, you're then counting this structure to the upside as a wave 1 in a 1, 2, 3, 4, 5, and it has to be said that the impulse to the upside in a wave 1 is not as nice as a 3-wave structure ABC, as explained already over the past couple of days as well, and that is because preferably for an impulse we would see a wave 1, 2, 3, 4 and a wave 5, but this wave 4 retraced too deep, overlap with wave 1, which isn't allowed in an impulse, increasing the probabilities for an ABC here, which does count a little bit nicer, but of course the local price section will give us all the info, as the common target for a wave 2 is between the 618 and the 786, taken from the low to the high of your wave 1, with the 886 being a very rare target for wave 2 at 66.6k, and the invalidation is the low here at 66.2k. Now the only scenario that can fit in a wave 2 would be an expanding flat at the moment for a 3-wave A, a 3-wave B, and then an impulsive 5-wave C to the downside, ending inside the most common target area for your wave C, which is between 68.2k and 66.5k. The most common target for a wave B, however, is the 1.236 to the 1.382 Fibonacci taken from the start to the end of wave A, with the 1.618 being a rare target for wave B in an expanding flat. And you can see that the 1.618 is hit, which does lower the probabilities for a flat structure. Inside wave C, we're then also looking for a 5-wave impulse structure to the downside, as it's a 3-wave A, 3-wave B, a 5-wave C structure. So also here we're going to be looking for a wave 1, 2, 3, 4, 5, meaning the scenario I've shown earlier for the bearish count 1, 2, 3, 4, 5 is the same as for the bullish count. Looking for a wave of 4, the common target area as explained, and then one more drop towards the downside in a wave 5. But as mentioned, what you don't want to see in the bullish scenario is the 886 touched, as that would significantly decrease probabilities for a wave 2. As price topped out yesterday and moved towards the downside, the retracement went to the 15-minute order block here, and after rejecting we saw very big bearish CVD divergences, meaning that market longs were absorbed by limit shorts, increasing the probabilities to move to the downside. And you can see that here as well, lower high on price, much higher high on the yellow line, which is a bearish CVD divergence, increasing the probabilities to move towards the downside. Now that price created this low, we have to continue to observe the CVD divergences on the right side of this low preferably, and if bearish CVD divergences continue, the probabilities to continue to the downside will increase as well. And if we then finally look at the probabilities of the different scenarios, especially locally, we have two scenarios where the word rare is part of the analysis, because in the bearish scenario, looking for wave 1, 2, 3, inside your wave 1, your wave 5 is the extended wave structure, which is rare, as by far most commonly that is your wave 3. Also inside your wave 5 you have an incredibly short wave 4 and a long wave 2, which is also uncommon. However, the move of the 66k lows, I still can't deny it, counts better as a 3-waver compared to this being a 5-wave impulse structure, as for an impulse preferably we would have seen a wave 1, 2, 3, 4 and a wave 5, at least one more high without touching this high that we did during the retracement over here. So we'll see if that is the case, because if price does move down and take out this low, this has to be a 3-wave structure. Now from this perspective, if we look at the local price section, one would then say that the probabilities are a bit higher to take this low at 66k, just because this counts better as a 3-wave structure to the upside, which increases probabilities for the WXY. Of course, if we do move to the downside and take out this low, it also opens the door for bearish scenarios on the higher time frames. For the bulls, it is very important to start ranging sideways here where we are right now. Based on the lower time frame move down, it makes sense to see at least one more wave 4 and then one more low to the downside in a wave 5, where of course preferably in the bullish scenario you are not touching the 886 at 66.6k. The moment you touch that 886, the probabilities immediately decrease significantly for the bullish scenario in a 1, 2, 3 and will increase for price to take this low. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.